The S&P is up nearly 5%, and the Nasdaq is up nearly 9%. My next guest is wondering if Wall Street overreacted to tariffs, whereas Main Street didn't. He said it's pretty clear professional investors have been more pessimistic than retail ones. For more, let's bring in Tim Seymour, CIO at Seymour Asset Management and a CNBC contributor. Tim, a topic near and dear to our, we talked about this a month ago. I was talking about on social media at the time, but it remains the case. Lots of people were saying, I'm getting in. Financial advisors were saying their clients wanted to get in, and that was not what I expected because consumer sentiment has been so bad. So you're like, how is it that consumer sentiment is horrible, but retail investors are buying and the pros are freaking out? Like, none of it makes any sense.
Well, the smartest minds on Wall Street, and I think, for example, take J.P. Morgan's Bruce Kasman, who's their chief economist, who I think is one of the best.
Yeah.
I mean, they've just pulled in their recession odds from 60 to 40%, saying, it's maybe we squeeze out 25 basis points of GDP growth in the second half of the year. And first of all, I think he's right. And again, I think he's excellent. But I think if you look at the move, at least going into Liberation Day, a lot of that repositioning, a lot of that bringing that gross down, but a very quick reversal in net longs to net shorts was from the hedge fund community and from CTAs who followed. A lot of this was momentum driven. A lot of this was without the retail investor. And suddenly the retail investor looks a lot smarter. And frankly, buying the dip was what we were hearing from a lot of people, not necessarily on the bottom per se, but no one was running out the door. And I think that's notable.
Steve Sosnick mentioned a similar phenomenon when he was here yesterday. He said last week there was a ton of retail buying of UNH, enough to kind of move the needle overall on how much retail investors continued to buy the market. He said, who knows if they'll be right again, but this is noteworthy behavior.
Well, UNH, which has been such a heroic stock over the last 3 or 4 years, and that fall from grace was not just notable, but it was something that really is rarely seen in a company that yesterday was a blue chip and today is priced as a pariah. I mean, I think UNH is worth nibbling on. I do think that the dynamics around Medicare Advantage and the lower margins, everything very well flagged. I think the change at the top, while not expected, is important, and I think the valuation makes a lot of sense. So back to the retail investor, do they have an edge here? I'm not sure that they do. I think momentum sometimes. Wall Street is outthinking itself. There are so many risks out there today, and I think it's notable. Jamie Dimon brought them tied them all together in a really important speech yesterday. But the pain trade right now still feels like it's higher, mostly because, the soft data hasn't been great, but the hard data has been absolutely fine until that changes, and it'll change suddenly. But it's time to own the market.